Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. I totally lost track of the time while I was eating. But you know what? I'm not expecting this morning, at least, to be too big of a day. Although I'm already seeing some things like, I haven't seen the full charts, but I'm already seeing some things that has me like, what's going on here? No, we don't need that. First, though, I have to find my chart. Where is it? There it is. Okay, so yesterday in the Treasuries, well, we did get above that 113 even area, if only briefly. Basically, as the S&P was. So let's start with the E-mini. Yeah, E-mini took a pretty good dive yesterday, and then eventually they pulled it out. It wasn't as big of a dive, but they pulled it out, right? Now, as the S&P 500 was selling off, you did see pretty strong buying in the Treasuries, but then afterwards, they collapsed pretty quickly. So we'll talk about what I think that's about. But in the overnight, we've come back up. So but I do think that we may be in a sell the rips kind of environment in the Treasuries. Overall, though, I don't expect there to be too much here this morning because people are really going to want to read that juicy Federal Reserve meeting minutes report this morning, or at noon. Oil taking a dive this morning. That's interesting. Gold and silver here. Well, silver really jumping up there. I'm kind of liking the looks of that. Kappa also jumping. Japanese. Ooh, that's a much bigger. So the Japanese yen is a could be a big problem for the markets. Okay, because these are both things that takes me a bit. So I might as well go through the charts. Okay, here's Bitcoin. Bitcoin hasn't taken lower. Okay, so I am seeing two major flows come in here into the Treasuries that concern me greatly. I got like a whisker poking me. It's really annoying. All right, so one of the flows is corporate bond issuance. So we have definitely moved into a different regime in the market. A lot of the really, really big AI names have taken a huge haircut, and even the big tech companies that have really been, if not led the rally, been pretty much solely responsible for the rally, right? Pushing us up. And they have all kind of taken a haircut. And now there is an acknowledgement that in order to make money on this spend in AI, it's going to require insane amounts of investment, both in data centers and infrastructure and power generation, etc. And that means, not only will it take an insane amount of investment, but all of the investment. There's nobody out there big enough to fund this. The money is basically going to have to come from literally everywhere. And that means, yes, corporations have to issue bonds. So we saw earlier in the week, Amazon issue an announcement of issuing bonds. Market reacted very, very strongly to that. I think that we should expect to see more corporate bond issuance. And as that happens, that's going to push the interest rates up. And that will kind of make investment harder. And like, it's just this whole loop. It's not a good loop, right? That can go bad very, very quickly, because you get to a point where the rate is too high. You can't get the amount of investment in it that they want, and then the whole thing is kaput and they bail on it, right? So that can flip around very, very quickly. The other one is the Japanese yen. The Japanese yen continues to be pressured, and this is another thing where people have been going to Japan, borrowing money in Japan, and then bringing it over to the US and buying bonds with it or buying equities with it. And if the interest rates in Japan are no longer favorable and the Japanese yen continues to fall relative to the dollar, that means that those guys have to sell their assets here in the United States. Not all of it, but they'll have to sell some portion of it to deal with the higher interest rate. Which means selling in treasuries and selling in equities over here. And that also means higher interest rates. So basically, in this new regime that we have, the market does not believe that we are going into a recession, right? I wouldn't say that the recession is off the table, but that doesn't seem to be the leading theory right now. And if that goes on, the Federal Reserve can only cut maybe one more time, then that means that there is a lot of reasons for people to sell bonds, even if, we're in an easing cycle. So kind of working against what the Federal Reserve is doing. Now, of course, as that happens, that will further depress the job market, forcing the Federal Reserve to again cut rates. Does that get to a point then where it actually leads to some real inflation? I don't know. But that's kind of the situation that we're looking at right now. So, for now, I don't think that we do anything this morning. We'll get the Federal Reserve meeting minutes this afternoon. Tomorrow, we'll get some job market numbers, and we'll see how the market reacts to that. And then we can kind of take inventory and see, do we think that this is headed for, kind of more of a short-term problem? Well, and then we do appear to have an end-of-year Santa rally kind of on deck. So we might have to get past that first, too, before it gets into this, well, interest rates are a problem. Right? If we get there, then the S&P 500 can't just go straight up every day. Doesn't mean that it would be like a crash. Might not even necessarily be like a 20% decline sort of a thing, but it will be a much more difficult market. So now we got to look at, I updated, well, I've been working on a more advanced volatility indicator. So I had it on my other workspace. I'm going to put it on this workspace. Variance range. I need to come up with better names for these things. I think that this one should be advanced volatility levels, and this one is variance, but that's, I don't know if that one's actually that useful, but it was just kind of, a way of graphing out the variance to try and debug some things and stuff. So I don't know if I'll actually make that one available. This one, see what we get. Okay, well, it does give me some love. It does give me levels. It does. No, that's not. what I want to see. Oh, is that because... Yeah. Oh, the weight is 0. Did I, when I was testing it, did I have it at 1? It wasn't at 1, it was like 0.8. There we go, 0.9. Very, very good. So what this does is it's using, you know, the base level that we get, and then it's looking at the variance in the market and adjusting the levels as the variance changes. So that you can see right here, there's a spot that it gets to that where it hard bounces there. Now, I think that there are some other changes that I can make. Like, one of the things that bothers me is that, like, if we're going up, I think that all of these lines should go up. These ones shouldn't go down. So it needs to be like directional variance or something like that. Another issue is that, you know, I'm basically kind of looking at over the session. So do you see how, like, as time goes on, these lines kind of come in? That's because time is running out in the session, and so the amount of room for the market to potentially move during that time, right, is decreasing, and so that's why the lines kind of come in. But the issue with that is that we're basically treating every bar equally. And really what we should do is we should treat it like by volume. Because, like, you know, there's going to be overnight session is going to be relatively low volume, and then there's going to be this period, like especially when we have news, where there's going to be a lot more volume, right? And so in the places where there's a lot more volume, we would want these bands to expand and get further out, right? And then when we're doing the overnight, we want these bands to be a little bit closer. And then you should be able to get something where, like, maybe these bands get closer and it would touch there and it would touch there and it would touch there. So if I'm concerned that to do that, I might need some machine learning, you know, like have something that looks at the volume over the last 90 days and generates a weighting of the volume or something like that based on the time of day and whatnot, in order to, you know, make that a little bit better. It also doesn't deal with the intra bar. It just uses the closes. So, like, if there's like a big spike in the bar, the variance would not increase enough. So those are kind of like maybe what I just list, like 3 different things. It's kind of crazy because as I'm going, getting this alone was actually quite complicated. There was a lot of math involved, and I had to go back and forth with ChatGPT a bit to figure out what was correct. And I think there's still a problem because it's not really including the variance very much. So I think that the variance that I'm calculating is too high. There's a scaling issue with it still. Not converting between. So there's this issue, man, it gets so complicated. There's this issue where like what you would calculate as variance from so first of all, we don't get daily volatility. We get yearly volatility and we convert it to a daily number is what we do. Right? That's what the original indicator was. Then you get we're looking at intraday variance, right? So how do you convert from yearly volatility to daily volatility to daily variance to intraday volatility and intraday variance, essentially. And there's like all sorts of crazy conversion factors and things like that. Like they say, well, like it tends to be 1.5 times this, or, you know, it's like using things literally like that. And then there's also this whole issue like, well, normally the way that people calculate the variance is they just take this square of the returns or the square of the log returns. And then that kind of doesn't deal with fat tails very well, which the data series that we're talking about is very fat tail, right? You can have like most bars are like 1 tick, and then you can have one that's like 32 ticks. So that's a big problem, right? So I have to use mean absolute deviation as kind of like my variance measurement. But then I have to convert from that mean absolute variance into mean absolute deviation into a variance measure, and then convert that variance measure to the daily measure. And what's happening essentially is that the measure of variance right now is too high. That's why I have to use like 0.9. But what the lines that I get there aren't bad. We're kind of middle of the road right now, though, aren't we? So it doesn't look good for what's going to come in the session, is it? I suppose I should try and make this chart look a little bit cleaner. How about that? So when I was doing this yesterday, well, which ones do we care about more, though? I think in these ones, this one looks a lot better as a line. You know what? I should just change it in the color. So anyways, Uzi, I don't know if you're still there, but, you know, because I've been going back and forth with him on this. That's kind of what it's doing and where it's at. I think that I will probably put a lot more work into it next week. I think for the rest of this week, I want to focus more on writing video. Just the more that this goes on, the more I'm like, I really need to get these videos out. There's one, I want to make one about order flow, and I want to make one that's like, I kind of think is like a big shift to the way that I approach the making content. The tenor of the content, I guess you could say. And but I really want to get that order flow one out, because it really seems to me that like order flow is becoming a big subject, and I think I can make a really, really big video that will go through a lot of the issues with order flow. And then maybe what I can do after that is I can split that up and make individual videos or something like that, you know? Like take each of those concepts and go into more detail on them. You know, it's interesting to think about. As I'm watching order flow kind of get inundated with junk education. And I think it's the same thing as the price action stuff, which is to say, like, why is price action so popular? It's because people don't want to pay for the tools, right? They want to just look at a chart. They don't want to have to pay for anything. Which is funny because, you know, a lot of anti-gurus will say, well, the reason that they're telling you this is because they want to sell you a service. Well, yeah, probably. But that's because really to stand a chance in this market, there are certain things that you need. And if it's a really quality service or tool, costs money. But so you get these people that they're paying for the order flow tool now, right? But it's still the same conundrum. Basically, everything that they learn is going to be tailored to those tools. And I can kind of see this thing in the order flow space. I think the only thing I see that is not really prone to this is Jigsaw's DOM. Like, Jigsaw's DOM was literally, okay, here's how these DOM traders are trading and looking at things, and let's add features in that makes it easier for them to do what they do. And that's really how so the tool was built from the way that they're trading. And what I'm seeing in a lot of order flow tools is the opposite. They invented this thing like a footprint chart. We invented a footprint chart, or we wrote a footprint chart, or we wrote a Vista chart, or whatever you want to call the bookmap chart, right? And so now you basically, everything that you teach, everything that you focus on has to be geared towards that tool, even if it's not that useful, you know? And so, like, what are some of the fallacies that I'm seeing with order flow? Oh, well, people will go and see, they'll see on a footprint chart a price imbalance at a specific price and go like, okay, that's a signal for me to go long. Well, no, there's big issues with that. Like, the best signal in order flow is seeing that highly correlated order flow sign. Basically, like, persistent market buying or market selling, imbalance between buyers and sellers. Imbalance at one particular price is not necessarily indicative of that, right? Or Vista chart. They look for areas of large resting liquidity listed in their bookmap chart and fade those areas. Well, that's a big mistake. Big mistake, because in a trending market, what is going to happen is you're going to see those areas of large liquidity, and they're just going to blow through them over and over and over again. So, yeah, I want to make a video about that. I think a video like that could do really well. All right, what was I doing? You guys have been really quiet this morning. It's because I was so late. That's what's going on, huh? So let's come over to this. I think that I should change the default, thing that I get here. Not be a stroke. You'll probably be quite... Dude, guys, so Uzi was showing, because his dog died, right? You're showing me pictures of his dog. Look at that. Look at that dog. I can't tell that that's an old dog. That just looks like a really good boy. You know what I mean? And I really feel for, like, what you're going through. Here's another picture. Apparently the dog liked to eat at the table, so they put the thing on the table and the dog would eat politely. He was, this was a dog that was much more involved in their life than a normal dog, right? So it really is like losing a family member for him, man. So I really feel for you. I mean, do you remember? Do you remember when my sister died? Back in, man, was that 2020? I think. I try not to think about it because one of the things, one of the thoughts that I will go down when thinking about my sister is that the politicians basically killed her. Like, she was one of those people where we said, okay, like, maybe there are reasons to flatten the curve and, try and reduce the spread of this disease, because especially for the older population, there are a lot of people that will die from disease like that. But there are a lot of negative consequences too. And how are you balancing that out? Like the problems with increase in mental health problems, increases in domestic abuse, the issues that the way that it disrupted everybody's education, that a whole generation's education, right? You're not measuring that. And it just turned out that my sister ended up being one of those victims. Killed herself. And I think that it was that she was looking at everything. She was unhappy with when she get drunk and whatnot. She was unhappy with her relationship. She was unhappy with the way that the world was going, and so she decided to just exit. Probably was like a impulsive thing too. She ADHD, way worse than me. Oh man. But and the thing is I am not right emotionally. What is the proper way to say that? My emotions are not the way that other people's are, because the ADHD medications that I take, to some extent, I think give me more control. Like normally, the issue is being able to control emotions, right? But the medication maybe gives me too much control over emotions. Like, I have to logically think I should be this or I should be this and work myself up into that. To just have like normal, social interactions with people. It's really kind of weird when you think about it, because I think we have this idea of like how emotions are a problem and we just want to all be pure logic. But actually, emotions are to some extent logic. They're kind of like a like a help to your conscious mind, and help put you into the right states and so forth for you to do the things that are going to be the best for you, even if it doesn't necessarily make logical sense. But then there's the situations where it's not really helping you, right? So I think that should have sent me into deep depression, and it didn't. But even then, I couldn't trade. I don't think we traded for a month and 2 months or something like that, right? It took a long break. Now, you might think, well, it's a dog, but I think that it would be for him on par with losing a family member. And you don't have anything to blunt that, Well, you have a spouse. I tell you, I do not think I could do. There are times where I think, because my wife is not really the entrepreneurial type. I don't think, honestly. She is very much, I think, she avoids taking risk and plays it safe, and tends to be very socially agreeable. For instance, she's very, very agreeable. Even when she's playing games, I can just kind of see in the strategies that she does, she always takes the safe option, right? Not very entrepreneurial. So there's been times where I thought, like, oh man, maybe if I had somebody more entrepreneurial, this would all be easier. But it really wouldn't. Because the thing that my wife is special at is that she has an extremely secure attachment style. Extremely secure attachment style. And I really don't think that I'd be able to do any of this stuff without that. Because I don't have to worry about if I'm trading and I screw up, how is my wife going to react to this sort of a thing, right? I can't imagine for people that are like all the time on the subreddits. Do you guys see this stuff on Reddit where like, especially when the spouse posts, like, should he really be doing this? That sort of a thing. Like, that would make effective trading so much harder. You know what I mean? And when you have a really secure partner and you've lost something, right? You can just retreat to your partner and you still have a secure relationship there, right? If you don't have that secure relationship, then like the attachment, the anxiety just like takes over, you know? There was a time where I could suffer a loss like this and it would be over in a matter of hours. Death is inevitable. He was old. Ultimately, it's just a dog. But I'm not capable of thinking like that anymore now. Stuff hurts. It hurts away I'm not used to. Now that's interesting. I wonder what would cause that. Oh, I missed this one. The only scientific achievement the world needs to work on is making dogs live as long as humans. I'm told though that like usually the first dog that you get after you become an adult tends to be a special dog. If dogs lived as long as humans, there are a lot of experiences that I think are really worthwhile that people don't get to have. You know, like when we got my Papillon, and the boys were really, really young, like 2 or 3, right? Watching them play with the dog was their greatest. They don't really play with the dogs. It's kind of a weird thing. I think if you've grown up and the dog is always there, that you're not the same thing with it, right? They're not as so interested in playing fetch with the dog or messing with the dog. And when they do, it's because Asher becomes obsessed with picking up Maple, who is just the most submissive. She is the most submissive dog. Oh my gosh. What is it? Is it just like a girl dog thing? I've kind of wondered, maybe it's just that I don't like the personality of girl dogs. But it's just like you get this dog. She seems really, really stupid, but she is the biggest people pleaser ever. Like if she understands what you want her to do, she 100% does it. Is really quick to do it. Just the most submissive animal on the planet, right? So they can like pick her up and like put her in boxes and things like that, and that's one of the things that he will do is he will keep picking her up and like locking her in the cabinet and things like that. That's all that the boys do with it, right? But I think, like especially with Ethan, you know, there's gonna be a time Goku's gonna be dead, and he'll be, you know, like 12 years old or 12 or 14, and then he'll get to experience having a puppy as a teenager, right? Let's see here. I think studying him out 9 years ago did a number on my Solar Vet. Connected with another client who wanted to breed her dog. We were hesitant, but after going to her house and meeting the female dog, we just did it. And after the puppies were born, I whelped them for 9 weeks. 7 huskies. Oh, wow, you had Oh, that's interesting. So are you saying that the female dog came to your house? And because usually it's the other way around, wasn't it? I'd be lying if I didn't say, oh, no, having puppies is the greatest. Absolutely. I kind of wish the dog that I got, you know, like breeding rights was way too much. And I didn't think that their line was that great. Like, for instance, Goku had like a recessed testicle, for instance. So I wouldn't necessarily have been the best breeding dog, but I would like to have dogs. Melissa said that they did have babies with her old Yorkie that was purebred, and they loved it, and you know they made a lot too. They're like $1,000. The owner of the female, they had money, like big house and everything, but the lady never mentioned that she'd have to go back to work, so she felt all bad, but would leave the dogs with me for 5 days a week, and was like, yeah, hell yeah, I'll do this. We kept the 2 puppies, and so did she. Wow. They only sold 1. Wow. It really is. I mean, that it's kind of the problem with huskies, right? Is that huskies have personality. You hanging out with a husky, you're gonna like the husky, and it's just that most people do not have the lifestyle that will really match with the husky as they get older. This was the thing that I never, like, I kind of knew that was the thing, but I did not realize how deeply integrated that dog was in your house, you know? I mean, I'm gonna guess that when the other 2 are passed, that you'll probably still get huskies, yeah? Or do you think maybe you're done with huskies? I have a really incredible photos of a dog family in action because it was totally not the animalistic thing I thought it would be. Ours and the female had apparently a real and affectionate dynamic that was all easy to humanize. You know what? So that reminds me of this. I think I'm just being like ADHD and just kind of like running with anything because I really don't expect the market to do much today. But there are some people that really try to, like, they're kind of more on the evolutionary biology kind of side of the spectrum, and these are the people that are kind of like, well, you know, monogamy is not necessarily the natural thing in humans and this kind of stuff, right? You know the kind of people I'm talking about. And one of the things they'll talk about is, like, you know, back then in a tribe, they didn't even necessarily understand where children came from, or that child was that father's, or any of that. Have you ever heard people say that kind of stuff? Because to me, that makes 0 sense. I tell you what, man, you have 2 kids. If you know, I had a kid and then I didn't see them born or anything until they, you know, and I didn't get to interact with them until they were 3. And then you put me in a room of kids and told me that one of those kids was mine, I think I would be able to pick them out within an hour. It is so wild when the child has a part of your nervous system in them, you immediately recognize it. And I see, well, you know, Asher, he's autistic. He does a lot of weird things. Okay, but especially with Ethan, he does all of these things that I did that I thought were just, you know, weird things that I started doing. So, you know, like he is constantly humming or beatboxing. That's something that I do. I mean, I think I kind of control it when I'm as an adult. Like, I don't go to work and beatbox, but you might catch me if I think I'm alone in the hall beatboxing to myself, right? And he does it. Did he pick it up from me? I don't think so. He keeps humming the freaking the Demon Hunter songs. So that's kind of wild. It's like, wow, okay, that's a genetic trait. Okay. When we made the decision to get a dog, the wife wanted a Rhodesian Ridgeback, and I wanted a German Shepherd. Well, aren't you glad that you didn't get a German Shepherd? Jeez. But we agreed on a Husky. Now I don't think we'll have anything else there. What is a Rhodesian Ridgeback? I've never heard of that before. Had to look that dog up. I've never seen it. Oh, it looks like a doggy dog. 5 reasons you should not get a Ridgeback. And that's the clickbait. I want to click that so badly. So bad. My wife wants a Bernese Mountain Dog. So, one of the things is like you can get service dog for autism that like the dog can help them calm down and can help watch them. Because the big concern that I have is Asher wanders outside. We've put locks on all of the doors, and he's pretty good about those things now. Like, I don't have to have everything completely locked up because he's going to destroy them. He'll get into things that I don't want him to get into and make a mess, but it's not like it was before where it was like, you know, you really had to protect property, you know? But there's still the possibility that he wakes up in the middle of the night and just decides he's going to go outside. So I have to have locks on like all the doors and everything, right? So the idea is you get a dog, and then that's his dog, basically. That dog spends all the time with him, and you'd want it to be a big one so that he can really hug it and all that sort of stuff. And if he decided to go outside or something like that, the dog would follow him and be trained to try and get him to come back inside. Right? And from my research, the 2 types of dogs that would be the best for this would be a Bernese Mountain Dog and a Golden Retriever, of course. Of course, a Golden Retriever. And everything that I've looked at on this kind of says to me that a Golden Retriever would be a better dog for him. But she really wants a Bernese Mountain Dog. I don't know what it is. Something about the look of that dog. She really wants one of those. It was never even, you know what, the funny thing about it too, she's kind of in denial about it. It's kind of weird to me. Like, I didn't realize this was a thing until we were over at the Shields. Oh, you guys, I think Shields is only a Utah thing. So Shields is like Cabela's, but like 4 levels or something like that. It's massive. And very, very ski focused too, by the way. Oh, Shields. Shields is a crazy store. Or let's not say ski focused, winter focused. I mean, they completely changed the store based on the season, but you know, it's a good place to go for winter stuff. We're at Shields and somebody had their Bernese Mountain Dog there. And like, she could not take her eyes off of that dog. Like, we're having a conversation. She's not paying attention to the conversation. Anything. I had never seen a reaction like that. She clearly liked something and couldn't think about anything else when that freaking dog came along. So I don't know what it is about that kind of dog, but apparently she really, really likes that kind of dog, and we're probably gonna have to end up getting that kind of dog. The internet will literally tell you never get this insert animal here for these reasons, yada yada. It is. I mean, it's the best clickbait, right? I should have gone down that route. When I got Goku, I mean, even still, he is the cutest thing I have ever seen. Like when he was a puppy, I really think that I had like one of the top 10 most adorable animals on the planet for a while there, right? And I took some videos of it and everything, but I just didn't know how I would make content out of it, right? But there are dog fluencers out there that make insane amounts of money. I think it would be so much easier to be a content creator in the dog space. Ah, man. But that's one of the ways that you clickbait people, especially if you're a YouTube dog fluencer, right? Explain to everybody why they shouldn't get this kind of dog. They're escape artists. I had one instance of that, and it was because the harness fell off. High maintenance. Now just include them in their life, take them for walks, they're fine. I mean, that to me is high maintenance, right? Or for a lot of people, having to go on a 30-minute walk every day is a big deal. You know? They're impossible to train. No, yeah, huskies are very trainable, right? But they are stubborn. They are stubborn. Literally the opposite of everything I researched on the internet. You know what I found though is that like there would be like books you can get. If you get a book on that specific breed, they are really, really good. And you know, I got one for my dog and I read it and I was like, okay, these are good things to keep in mind. I don't think my wife read it. I really wished that I had forced my wife to read it and that we had taken everything that it said extremely, extremely seriously. Because they said things like, well, Papillons will try and get in your trash. Yes, he does that. Papillons can be a little difficult to house train. Like, you really have to stay on them to get them house trained. That was a problem. Actually, you know what happened with our dog? Was he was really good. He seemed like he was house trained for the most part. And then we got the other dog, and it took a while for her to really get well house trained. And I think that her kind of made him think that the standards were loosened or something like that. And now he will just mark everywhere. He will just mark around the house. So he is like forced to wear a diaper now. And, you know, I really wished that I had stayed on top of that. I was really good about training him early on. But the issue was that Asher was not entirely mobile. Once Asher became entirely mobile, it's just been impossible to focus on anything, you know? So. Right, you had all 5 puppies in the litter, mostly house trained and night. Really? We talked about it a bit before it because the people what usually suck the most don't train, don't play, don't try. Like, you know how chihuahuas are always little devils when you finally meet an angel chihuahua. Yeah, oh yeah. If you take a chihuahua, you socialize them, and you train them, they are incredibly intelligent. They will tease you. They're really interesting. It was a matter of putting puppy pads in the nursing area, and as they opened their eyes and started wandering the puppy pads around the house, then gradually moved the pads outside. Yeah. No, Papillons are harder to train in that respect. You have to keep an eye on them, and you see them not peeing on the pad and go and put them on the pad. And we did really good at first, and then, you know, you don't want to keep your eye on him 24/7, and he will sneak around and pee on something. You know what started it? This is the thing that's really weird. I don't know what's with this. By the way, interesting little move up developing here, I think. We were at Costco, and there was like this giant Pikachu pillows beanbag sort of thing. And it was like super cheap. It was only like $30. So I got that. It was like, that would be a good thing, like to keep up here. The boys can sit and lay on it. It's been good. I'm glad I got it, even though it like gets totally trashed and dirty and stuff. The dog pees on it. There's something about it that the dog thinks it needs to pee on that. Ugh. What part of the family dog dynamic was that was kind of neat but also gross is that mom and dad would follow them around and clean up after them. Some misses were minimal cleanup because the parents would, oh, that's, I didn't need to hear that first. I think I need to buy a longer cord for my microphone because the boys keep pushing the cord and then it pulls my audio interface off the back. I learned a lot of new things during that time, like doggy style. Oh, geez. Okay, like, I think part of it is, okay, I think that, you know, Asher is autistic. Where did he get it from? You'd almost immediately assume it's me, right? Well, I have ADHD for sure. Is it just he got hit with the ADHD stick too hard? I don't think so. I think it is a combination of the genetics. And my wife is definitely neurotypical, but I do see the traits. She has the traits. So it's like, doesn't affect her or anything like that, but there are personality traits in there, right? And I think one of them is, you know, like autistic people will develop niche interests, right? And we only really talk about the way that it exhibits itself in men. Well, the way that it exhibits itself in women is they will become obsessed with makeup, obsessed with celebrities, and obsessed with animals. And I think that's her. I think she loves dogs more than a person. Like if I said, hey, I'm allergic to dogs, we have to get rid of the dogs that we have, or once these dogs die, we can't have dogs anymore, that would be grounds for divorce. I'm not even kidding. I'm not even kidding. So she knows a lot about dogs, right? And there were a lot of things about dogs that I was like, how do I not know this? How do I not know this? Like that dogs have on their butts these glands that will excrete a smell if they get too anxious, like if they get scared. I never, like a kind of like a skunk. I did not know that. I was just like, what the F is that smell? What did the dog do? Well, she got scared, right? Okay, that's crazy. And yes, the other one is dog mating behavior. That like after the dogs procreate, they will get like stuck together. Like the male dog will get stuck in the female dog and they'll have to wait for, you know, everything to calm down there until they can separate. The first time I saw that, I was like, why are you being so stupid? They also face away from each other. Well, yeah, I don't know. Like, after, he will definitely, like, mount and like we would expect, but then you're right, they'll, like, turn around. It's weird, man. So yeah, there was a lot more to know about dogs than I thought. I thought that cats were the weird, interesting ones that had lots of quirks to know about, but there's actually lots of things about dogs that people don't talk about. Yeah, they mount, they go butt to butt, the male yells. Yeah, because he can't get out. Yeah. Okay, let's see here. I was going to do something in here. Oh, yeah. I just want to change that to brushes cyan. Change all these to font style. I actually have video of it because the owner of the female left her at our house for the night. Being under the impression she was only going to be there for the event, we wanted to be able to show the owner that it happened, and my wife and I had to hold them from pulling apart. And then my brother behind the phone now, this is a Wednesday. Oh boy, what did I screw up? I have to take it off and put it back on in order for the changes to the plots to materialize. Alpha, variance, range. There we go. Kind of thinking I want them to all be 2. Oh, which also for this one, I don't have like different ones for the extended and the regular session, because it basically What is the name of the property? Is it auto scale? Auto scale. Oh, it is auto. It was an adventure. Yeah. You get it. Won't be quite as good of a dog. But... Let's see. Okay, good. It's kind of funny to me. So now I'm kind of looking here. Just like, I don't want to double check. $6.49. Oh, it is 6.49. Okay. What if you change this to Wednesday weekly options? Doesn't give you a volatility number. I'm kind of wondering if there's not a better number than the near-term options expiration, just because the treasuries are not going to be moving to, well, I guess this morning they're not going to be moving. Probably 6.49 is appropriate after the FOMC meeting minutes. Maybe that's what it is. Dude, I'm learning so much about this volatility stuff. Like, it's things that I saw discussed and mentioned everywhere, especially in Nassim Taleb's stuff. But it's not until I'm like doing calculations with it myself that it really sinked in where the problems were. And one of the things I don't think I understood is that those volatility numbers that we get, like that percentage number that we get, is a yearly volatility number. It's basically how much you should expect to make or lose in a year on that instrument. And then variance, like, well, I kind of understood what variance is, you know, it's like, here's, you know, it's kind of like the standard deviation is basically like median plus the variance, right? But there's all this crazy math about how you can get between them and stuff. Figured you'd end up going deeper down the rabbit hole with it than I did because you have the skill set to really, yeah. Well, I don't know, like, there's the Ninja Trader part of it, but I really think that where I've struggled is with the math. Like, can I show? I'm okay with showing you guys like the logic behind it, because I think the places where like my code is like, I don't necessarily want people to see my code, is because of the Ninja Trader specific stuff. But showing you guys might really help, actually, because it's so fucking complicated. It's so effing complicated. Okay. Oh, that's funny. I didn't get rid of the LLM comments. I always like to, you know, read what the LLM says and then, you know, copy and paste it myself. But in this instance, I kind of found that it was just started to become easier to just copy what the LLM had done. I would double check it and then copy and paste it. Okay, so what we're doing is we're calculating the absolute return of every bar. So this is the part that we'll have to change because it doesn't factor into like what was the high and low of that bar. And there are ways of saying like, oh, and this was another thing that I was really weird, was like saying, okay, instead of just what was the absolute return, we can factor in what the high and low of that bar was and everything. It seems like a simple kind of change, but like there's like all these crazy statistical consequences for it and like names for these different methods and stuff. So apparently if I use the high and the low, I have to scale it. I have to like take 0.75% of it or something like that. So, okay, that's kind of weird. Okay, and then to calculate the absolute deviation, so we're doing mean absolute deviation, that means that we have to add those all up. So we calculate an ongoing sum. K is the number of bars that we've had. So basically the number of samples in our mean absolute deviation so far. Okay. And expected bars is something I calculate somewhere else, and I won't show you because that's one of those Ninja Trader innovations that I had to, a little trick that the LLM would get wrong. That is basically how many bars are they going to be in a session. So it's like 1380 most days. Okay. So F is what percentage of the day we're at so far. All right. So then we get average, like the average step per bar. Do K plus 1 to avoid item bars. I don't know if I actually need the plus 1. It's probably not going to make a difference, right? Okay, project to a daily man. So this is one of the parts where I'm a little bit... Shouldn't it be squared instead of the square root? Yeah, but it's saying average ABS root per bar times the square root of the expected bars. Oh, we scale by square root of time because prices diffuse with the square root of time. Oh, so the square root of the number of bars. And that's supposed to project it to a daily mean absolute deviation. Okay. And then we have a conversion factor to convert our mean absolute deviation to the more standard volatility that everybody uses. And here we're using 1.6. So this conversion factor, I probably need to change into a variable and let you change it, because you might find that in ES is more fat-tailed than treasuries or something like that, right? Basically, a conversion factor to account for the fat-tailedness of that instrument. So then we take our projected daily mean absolute deviation times the conversion factor, right? And then we get to this other stuff like this. So this factor is actually the square root of 252, because it's the same thing that it diffuses with the square root of time. So we take the square root of the number of days in a year to convert from yearly to daily. And that's where I'm like, I don't understand. So when I'm going from yearly to daily, I do square root. But when I'm going from minute to daily, I also take the square root of it. But it's not the square root of it, actually. It's times the square root of it. I don't know. Instead of dividing by the factor. So I probably, if I drew out all of the equations, I would kind of see how they cross out, and we get to that. Okay. Then we do this. So here's the daily percent. So this is the thing where we're getting the daily percent based on the volatility that we scrape. And then we see which one is larger, essentially. This one is actually, I don't think that this is right. The adaptive vol, that's something that I might want to change. So that, like, if my projected vol, right now it's always taking the bigger of the two. But actually maybe what we want is for it to just always blend. So if the projected volatility is less than the implied volatility, it will bring it in and bring that line closer. That's probably what we need to do. So weight is like how much we want, how we blend between how much of the daily volatility versus, how much of the like implied volatility versus our realized volatility that we found on the 1 minute bars do we want to use, essentially is what this is, right? But to blend, okay? And then we need to shrink the volatility based on how much time is left. Since we are in linear volatility space, we multiply by the square root of 1 minus f. Some of these like math.maxes is just to make sure that you don't like divide by 0, right? And that gives us basically our expected remaining volatility for the day, and then we add that to the extended open to make the lines, right? So there's like 3 different steps of conversion between things, right? And I'm still not sure that I have it right, because if I try and make the blend like 0.6 instead of 0.9, then the implied the realized volatility number that it hits me with is like way too high. So yeah. And then while we've been going here, right, I've already explained like 5 different changes we can make to it. And like the wild thing is that even with that model that we got, no, I don't have it right. Oh, because I didn't put it back onto 0.9, huh? Yeah, so the weight is 0. Basically, we're only using the implied, and, or sorry, we're only using the realized, which is way too big. So we're going to blend between the two of them. Okay. So when you do that, you see right there. I don't know, if I try and zoom in, it doesn't really. Yeah, there we go. Do that thing. Now you can see. Whoa, hold up. Here's a place where the extended session implied volatility level, we busted through it quite easily, went well through it. But when we look at our adaptive line, they went like right to it. Almost perfectly. Almost perfectly. And let's load a couple more days. Here's another day where we had like a really big move up. So here's the thing that I find really, really interesting about this one is that, okay, the way that we get these lines is like, okay, what is the expected volatility for the day, right? So if we have the expected, you know, we would expect there to be like, here's these different paths of what the volatility would be, right? And this range between the two of them is our volatility, right? So that means that the high is actually going to be volatility over 2, assuming that it's going to be like a perfectly symmetrical Gaussian distribution, right? But if we're having a day where like the low was essentially the open, then the high is omega up, then you're going to have omega over 2, and then you're going to have omega, right? And that's where the two different lines are. And so you can kind of see this point at which the market realizes, oh, this is one of those days where the open is going to be the low or whatever. And they immediately move up to the next step. Isn't that fascinating? So like once you put it in there, once you have a good volatility model, you can kind of see how a lot of these things that we look at. By the way, another thing is that when it reverted back down, where did it go back to? Like, where's the liquidity hole? It's right where that volatility level hit at, right? So there's lots of innovations that we can make, but like the things that I want to add in here are going to be things where like this line down here. I think this line right here should go up like this, right? Instead of going down. Things like that. Or these lines, I would, it would basically say, oh, we expect there to be not very much volatility in the extended session, so this line will be like closer, and then it will extend out. And then, it should match that. Anyways, like those are some of the changes. But once you get a good volatility model, you kind of see this thing where a lot of what's going on is it moving from place to place based on what they expect the volatility to do, and then the market reacting to that change. And so a lot of the other things that we've been looking at, like I think my inventory cost basis, for instance, is probably a good example. There's things where it's like, is my average position, where is my average position in relation to the volatility levels, essentially? So, we've had all of this difficulty trying to find an automated strategy that takes advantage of inventory cost basis. But I'm thinking, once we have enough data for this one and we've refined the model about a lot more, combining them together might actually allow us to have those straight traits. Basically, where I can be like, this is going to be the spot where they're going too far and they're going to revert, and they're going to revert back to where the market maker's average position is. If the market maker average position is this in relation to the volatility, and that could be a testable setup, right? And that would be a setup that I think would have fat tails and might not necessarily be profitable over time, but that I think that we, using our discretion, can predict the times when you don't want to take that mean reversion trade, right? Because we know why it just moved up. We know what the flows are that are driving it that day, and ergo. I'm going to change this back to only show us one day of data. And set the scaling here. Well, so far today, it is playing out. So it didn't, we weren't able to see like that. It didn't get anywhere close to the volatility levels today. Right. So that's where, again, maybe if we had a model, I don't know how we would do it today, because we had a model that says based on the volume, and some periods matter more because there's more volume in those periods on average and everything. But I think that to really make it work on today, you would have to do something where like I am predict how the volumes will be distributed based on like the news and events that I'm expecting that day. Oh, by the way, I totally missed the S&P 500 just turning gangbusters on the open. Man, they are going hard too. You know what? Could we be? Well, they're not back to 67.25 yet, though. Something that we got to keep an eye on is I do think that the CTAs started going short yesterday. That was definitely what we were seeing in that opening drive down. And you could see them continue to sell throughout the week as long as we're below that level. But I think that there's a very high risk of the market flipping back around on them and them puking. So, especially if we get back above that 67.25, like, look out. I wouldn't fade that. Okay. And that's probably part of why the treasuries are going down, is you getting that equity correlation. But either way, it's still in line with kind of what I was saying. It's like, well, we start the session on the upside, and then you're going to see them sell it. And you know why they're selling it? Because this time period is the time period when all of the corporate bond offering hedging comes in. So I'm not exactly sure when they do it, but it seems to me to be like between 7:20 and 8:30 is the corporate bond market. And that's maybe why during that period I've had difficulty predicting what's going to happen, you know? We're learning interesting things. I'm really happy about it because, you know, I was kind of going through this thing where it was like, you know, like we have a lot of great stuff, but you want to keep progressing too. And what's the new thing? Well, we've learned a lot about volatility, so that's a new thing. Rock says a pretty big rally in it. Yeah, it really is. I mean, when you come back on the volume profile, it's probably not going to look that spectacular. Let's see. Yeah, you know, it's just kind of like, okay, it's just okay. It's above yesterday's highs though, right? Okay, but when you look at like a 5-minute chart and you see how fast that happens, good grief. Wowzer. By the way, something I should also mention. Yesterday, the lows in the equities seems to correlate with when Google announced their latest version of Gemini. And I think I've been telling you guys for a while. For instance, I said this in the the video about how to build trader intuition, I think it was, that, you know, if I was going to pick one right now, it would be Gemini. And what I'm seeing right now, I think really backs that up. The Gemini model is absolutely destroying all of the other models. And of course, when they release a new model, it's usually the best model, like no matter who releases it. But the degree to which this is beating other models on certain tests is kind of insane. Like there are some tests where like before they were only getting like a 5% and now it's getting like a 45%. So the Gemini model is a pretty significant leap. And the equities responded very strongly to that. Could that be what's continuing to go on this morning? Maybe. Gemini is absolutely dominating a lot. It still makes me laugh. Apple AI failed so hard and is so terrible. They had to ask Google Gemini to fully rebuild and make the Apple AI. They kind of gave up on their own. I don't know if they really tried that hard. Apple has really been lost without Steve Jobs, though. It's really kind of a bizarre thing. I think that if Steve Jobs was alive today, they would probably be taking things in a very different direction. Like I think that they would really be going in and saying like, okay, let's build a whole operating system that is built around the idea of the whole operating system being an MCP or something like that. So that almost all of you, because what I've seen so far is like, okay, well, we have Windows and then we'll just have Windows take a picture or something like that and send that into the LLM. But what if you had an LLM that, you have a list of every user action that happens in the operating system, and then that's all recorded and trained on. And so you say, when I'm doing this is what people tend to do, and it can just do it. Like, that's like he would be trying to fundamentally change the way that we interact with the technology, And since he died, it's just been like they continue to improve the products that they have, but they really haven't done anything groundbreaking. Even though there's probably opportunities for them to. Well, maybe that we're getting like the biggest sell bar that we've seen in the E-mini so far, so maybe that's the extent of the upside for today. They also released their own IDE, which I downloaded and opened yesterday, and it seemed to me that it was just another Visual Studio code fork, is what it looked like to me. So like, I don't know what's different about it compared to, say, Cursor or Hero. Actually, maybe let's ask it. What's it called? Lightspeed, I think? No. What is it? Come over here to my downloads and find it. Anti-gravity. It's called anti-gravity. Between Google's anti-gravity IDE and Amazon's Hero. Hero has been a good one. Yeah, AIRO. Should I use thinking? Now, let's just do fast. I don't think it really needs it. That's a great question. As both Google's anti-gravity IDE and Amazon's Kiro represent the next evolution in AI-powered development, moving beyond simple code completion to agentic workflows. Primary difference lies in their central development philosophy and the structure they impose on the AI-assisted process. Amazon's Kiro is built around a spec-driven development workflow. Google's anti-gravity is focused on autonomy with accountability through direct agent control of the environment. It was all about planning first. Well, you can have it do both, so I don't feel like that's a very good explanation of the differences. Anti-gravity gives the AI agent a very high degree of direct control over the development environment, including the editor, terminal, browser, etc., making it feel like an independent virtual developer. There's more focused on guiding the AI through formal specifications and a structured task list, acting more like a rigorous engineering manager. That is a part about Kiro that I think is really powerful, though. Sure, but you can put Kiro in vibe code mode and just code mode, and it can run the command line. So then at that point, what would be the difference? Assuming you were using the same LLM for both. Anti-gravity agent can autonomously edit code in the editor, run the server command in the terminal, actuate a headless browser, click on an element, fill out a form. Oh wow, well that's something that you probably couldn't get Kiro to do without an MCP. So I guess it's saying that you have a file open, it can actually control the actual editor. That is different. Oh. Anti-gravity has stuff to help you deal with multiple agents working in parallel. That's a big deal. Anti-gravity supports a unique form of feedback on agents. You can look at a screenshot the agent generated and place a comment directly on the image, like Google Docs comments, to redirect the agent's work. This allows for mid-task course correction based on visual output. I don't like, though, that the things that it's saying are mostly geared towards web development, though. Unfortunately. We should recenter. Actually, we should also come over here and check and see, was there some headline or something that's driving the equity buying? Or well, I guess that the other big thing today is NVIDIA. I kind of almost forgot about that. MP Materials stock spikes after JV. Oh, goody. I really should just own MP. Oh, well. Picked the wrong horse, apparently. My horse isn't doing too bad, though. They're kind of correlated. Because MP owns a lot of rare earth. Or REMF. So it looks like REMF is not benefiting as much as it is. It's up, but not as much. There is no emergency here. Blue Owl CEO says as private credit provider abandons merger plan. I'm a little suspicious here. I'm kind of wondering if the upside is people placing bets on Nvidia earnings being really good. First Home Depot and now Target reports soft demand. What's happening to the consumer? Well, they don't have any money. That's what's happening. You know, this makes sense because there's been a lot of, talk about like, well, consumer demand has been good, but then when you really drive into it, all of that demand has been driven almost entirely by the top end. So if you get into more like stores like Target, I think, Target thinks of themselves as super nice, but it really is kind of more of a regular person kind of a place. Not going to be driven by the high end consumer so much, right? Yeah, they're probably struggling because it's everybody except for the high end consumer. Man, so one thing I am kind of noticing through all of this is that the Japanese yen has been careening down. So that's kind of another question is if the economic data starts to look too good and then interest rates spike too high, that you then see the Japanese yen get destroyed and then that starts to cause problems. See what I mean? Like even when you look at the upside scenarios, there are things within those scenarios that could potentially cap them. If not, the upside scenario actually turning into a really, really big downside scenario. Oh man, you know what? I think that I have kind of adjusted to being able to stick around until 9 o'clock again, right? Like now, the amount of time that we have and the number of topics that I'm able to discuss and everything seems correct. Whereas before, it was always like we were just getting started and then we had to end. Okay, here's an interesting article about something that I have wondered or that is happening. Wait, so if Apple is essentially Chinese now and Gemini is helping their AI, oops, isn't that an American company giving LLM info to China? I don't know if that's, I don't think that that's true necessarily. What are the people in Discord talking about? Working class people are about to make millions of dollars. Let's read this story first. AI is quietly filtering out millions of qualified people before a human ever sees their name. The result is a market that feels broken even when the talent isn't. There's a quiet crisis happening in the job market, and most people can feel it even if they can't name it. Candidates who have always been hireable suddenly can't get traction. People with real experience apply for months and hear nothing. Recruiters feel stretched, then companies insist they can't find talent. Everyone's confused because the signals just don't make sense anymore. Here's the truth we need to say out loud. Hiring doesn't work the way people think it does. Well, I was thinking that this article was going to be like a study or some data or something like that, but this kind of seems to me more like a person's opinion. And like the thing is that even if the ATS systems are filtering a lot of people out and everything, if somebody is hiring, they're still going to get a certain number of people to interview, and they're hiring. So I really don't think that you can explain the rising long-term unemployment rate with that. I think that ultimately the bigger issue here is nobody is hiring. There's just not nearly enough people hiring relative to the number of people looking for work. It's become so extreme. And then the market became frozen in that extreme position. But let's keep reading and maybe they'll redeem themselves. The culprit isn't a talent shortage. It isn't a wave of unqualified applicants. It isn't even competition. The real shift is structural. The hiring systems that companies rely on have changed so dramatically, so quietly, and so quickly that almost nobody using them understands how they work anymore. Most companies now use AI systems that remove huge numbers of qualified candidates long before a human ever sees their name. These filters operate behind the scenes inside layers of automated scoring, skill inference, predictive matching, and risk modeling. Many leaders don't realize how aggressively their own tools are screening people out. This isn't a conspiracy, it's the hiring landscape we're in, the invisible ship that reshaped the market. We've lived in recruiting technology for more than 20 years. A few years ago, when candidates worried about being rejected by ATS, the fear was mostly misplaced. The tools were simple. Humans still reviewed most everything, but the ground has shifted. AI now sits inside nearly every step of the hiring process. It predicts, sorts, ranks, filters, and flags candidates based on patterns and historical data. It doesn't understand what makes someone capable or adaptable or uniquely valuable. It understands patterns. And because companies keep adding more tools, most candidates are screened many times before anyone even opens the applicant pool. Hiring quietly flipped from human first to technology first. Candidates never got a warning. Oh, hold on. Let's restart the music here. Recruiters didn't get much guidance. Companies saw efficiency and didn't look deeper. And the people hurt most by this shift are ones with non-linear paths, complex stories, caregiving gaps, contract-heavy careers, reskilling journeys, military transitions, or anything outside the old corporate norm. In other words, people with real lives. What the systems are actually doing. Here's what sits under the surface of today's hiring pipelines. Workday infers skills you didn't list, predicts your likelihood of success, and ranks you against historical hires. It penalizes gaps and pivots. It's now facing legal pressure for bias. Greenhouse becomes a filtering machine when companies plug in third-party intelligence. Paradox, Eightfold, Hire, Easy, Seek Out, Humanly, Hired Score, and Gem offer screening people before Greenhouse receives a resume. Lever, Oracle Recruiting Cloud, ICIMS, for smart recruiters, Ashby, and SuccessFactors all use their own mix of predictive scoring, skill inference, risk modeling, or video analysis. All of them can eliminate candidates before humans get involved. The people impacted aren't the most unqualified. They're simply not linear. They're older workers, parents returning for work, people switching industries, people who reskilled, candidates with life experiences, all because AI learns from the past. This is just opinion. Like, I don't think that they're right here. What is the difference between the adaptive and the static volatility bands? The static volatility bands basically say at the beginning of the session and the beginning of the regular session, this is what the options are pricing for the movement today, and then it's just a straight line from there. The adaptive bands start with that, and then they look at the actual volatility that we have seen throughout the day and how much it has moved from relative to how much of the session has passed, and then adjusting the bands. So if and I think that there's still some issues, but essentially when you get a day like this where there is a big spike, there are some spikes in volatility, it says, okay, there actually is a little bit more volatility from what we've seen in variance. There's more volatility than what was implied, so I'm going to move the line out further, and that way you get something that basically tells you, for this like one particular move, was that really outside of the bounds of like what the options think that things will be. So yeah, it's complicated. I'm going to change it even more. So that one's not available yet. There. Talking about jobs, I gotta go soon. Remember when I was talking about it going well and our changes? Well, my new manager is quitting too. He lasted about a month. May come back to negatively affect me and when I'm always nervous when manager changes because like the person that hired you, like they hired you because they liked you, and if it was a different manager, would they have picked somebody else? Maybe. And so there's definitely this thing that I've seen where like when the manager changes, it's inevitable that they end up making changes to the team, assuming that that new manager wasn't somebody that was already on the team and well integrated. But especially when it's like they hire a completely new guy or they bring somebody from a different group over, huge. I'm not gonna say it's a red flag, like it's something that has to happen, but it's usually not a good sign. I just can't get over what I'm seeing in the labor market right now, because you're literally looking at situations where very talented people with a very good relevant skills in today's economy take years to find a job. And when you're getting to the point where, because of a bit of bad luck, you're maybe going to lose your house or things like that, I don't think that that's a personal failing. I think that that's a policy failing. There's people that are in terrible situations that, you know, there's more people looking for a job than there are actually jobs. And in the tech sector, it's probably very extreme. Okay. It's not the fault of those people that they weren't the top 5% or whatever. You know, like, there should be more jobs. That's a policy failure somewhere. And I just don't understand how we can be saying, like, there's this group of people that have been unemployed for 6 months or more, and what are they supposed to do? But we can't cut interest rates or do anything to help out the economy. Like, come on. Come on. And the conspiracy theory part of me keeps saying, well, what's happening is they're squeezing the economy to make Donald Trump look bad. That's what the conspiracy theorist in me says, because I can't explain. You will find a job. Well, I think that I will eventually. To be honest with you, at this point, well, there was 2 jobs that I had that were in late stage. And I mean, I don't know if you really care where I'm at, but I'll tell you where I'm at anyways. I had 2 that were very late stage. The one, I don't think that I will hear back from them until maybe next week. The other one, I kind of thought that I would hear back from them late last week or early this week, and I haven't heard anything. I would expect that I would at least get like the rejection, but maybe it is they have already sent something to somebody and they're going to take until Friday to look at it, and then they'll start on Monday, and then I'll get the rejection or something like that, right? So that one I'm kind of like already given up on. There's another one that's going to take a while, but I don't know, like that's still maybe like a 20% chance that I get that. And then there is a one where somebody talked to me that I really want, but they sent me a message. I responded back to them. I gave a few days. I was like, well, I could do Monday, Tuesday, and now it's Wednesday. So like they're going to have to text me again, and maybe they just were like doing other stuff or who knows. So I'm just going to like wait and not do anything with it. Or maybe I'll respond back to them next week. But, you know, one of the things that really will get me down is when I get on LinkedIn or the different websites that I go to look at postings, and there's not any new postings that are relevant to me. And that seems to be happening this week. Like, it has really gone down. So, like, there's just not job openings. They're just not. And so if those 3 opportunities really amount to nothing, then the chances of me finding a new job this year are low. And that's just the way it is. And you gotta realize, like, okay, I kind of ran into a bit of bad luck, honestly, because, you know, I had a job that was pretty good. And I wish that I was still there, but it kind of didn't work out. And I think that they kind of were trying to reduce headcount is really what happened. It really makes me mad the way that went through, but that happens. Okay. Even though I made mistakes, they were going to get rid of me one way or another. But I worked for Goldman Sachs for 8 years, I am extremely proficient. I pick up things much. I know everybody says that they pick things up, but I really pick things up quickly, right? I am very productive. I get a lot more done than most of my colleagues do, and I have a set of skills that is unique and in demand. Okay. So in terms of like, you know, how much difficulty should you have in finding a new job? You know, I am probably up there. Like I should be one of the like the top quarter of people where it should be the easiest for me to find a job. And it's hard. So if I'm having that much trouble, what is it really like for everybody else? Right? I might find a job next year, but there are going to be some people in here in this market that if something major doesn't change, could be out of a job for like 3 years. Yeah. I think there's a lot of people that, like, how are they going to keep their house, for instance? You know, for me, I think that calculating it out, I should be able to last 6 months on my savings. And if that goes out, I guess I can always draw on things like 401ks and stuff like that, right? So I could last a very, very long time. But that's because I'm like an obsessive saver. You know, I know the markets and I've done all this stuff, right? What are the other people gonna do? What are the other people gonna do? And then every time that this comes down, they're like, well, the labor market looks really good. Unemployment is really, really low. We're concerned about inflation. We think that we need to keep interest rates high. What? What are these people going to do? I've never seen a situation like that. Like, yeah, you have recessions and stuff, but this is worse than the Great Recession. I don't understand how it can be. You have people in an employment situation that is worse for them than the 2008 crisis. But like everything's great? What? It doesn't compute. Doesn't compute. Something is very, very wrong. Very, very wrong. And I just want it to all be done with. Let's just have the fucking recession, you know? Okay, be a plumber, you'll find a job. Well, that's not gonna work because it's not just so simple as you go and apply to a plumber job and then you're a plumber. Unfortunately. That's kind of like another thing that's frustrating about this market is you go, well, I'm having a hard time finding a job right now. Maybe there's some sort of a shift that I can make where, you know, you got to go to where people are hiring right now. But if you make that shift, they're not going to hire you because one, pretty much every industry right now is oversaturated. I don't think that there is a place where they're hiring, the hiring rate is significantly higher than everywhere else. And they're like in strong demand for candidates. It's just, I don't think it's happening. And if it was, they're still going to reject you unless you have like some relevant experience for it. So you basically have no choice but to continue applying to the jobs that you have relevant experience for. If you aren't related to a plumber, you're not going to be a plumber. Where no one will hire the only hire brother, cousin's best friend, and that's rare even as their business is understaffed. There's really two choices. They're not mutually exclusive either. Continue applying for jobs that you have relevant experience, and eventually you get lucky and you find a job, or you find ways to run your own business. And that's all there is to it. Well, this is another one, because I think, again, here I'm luckier than other people. I have a business already kind of going. There's a lot of really good things about the business. I really think I've not seen another set of a package for NinjaTrader that comes anywhere even remotely close to the kind of stuff that ours does. You know? I really undersell it. But I don't really know what to do to market and get it attention and get that to really be a really strong revenue generating business. You know? What am I supposed to do? You go down that small business route, and how are you finding traction for that either? I think that the reality is that the economy really sucks right now. And it's just bonkers to me that the economy can suck this badly. And the Federal Reserve is not like, yeah, we should be cutting interest rates. Well, tomorrow we'll find out how bad it really is, huh? Find out how bad it really is. Okay, going back, Rox asked another question that we should cover. Is Gemini better at C#/NinjaScript compared to Claude? I am not sure. But what I have found, and this has been the case for a long time, is that Gemini seems to be better at certain logical issues. Like if I'm talking to ChatGPT and it says, well, you need to do this, this, and this, and then you say, oh, I tried that and it didn't work. You can go back and forth with it maybe like 3 times, and if that doesn't solve the problem, you just give up, because it will just go in a loop. That is like it's basically saying, given this context, all of the roads lead to this one dead end, and it can't get itself out of that dead end. But Gemini seems to have this ability to actually look at the logic of something and say, this is wrong and this is wrong, we change this. So, and that was before Gemini 3 came out. I'm not sure if when I come to like over here, oh, I have it open over here. You know, I have fast and thinking. Oh, thinks through complex topics with 3 Pro. Okay. So maybe it is using 3. But like when I was doing it yesterday, it was helping me get through some of these issues and understand what I was actually doing with volatility. So, you know. Also, the other really big one that Gemini does is Gemini is way better at looking at things. Like if you give it a picture and you ask it questions about the picture, or if you give it a video and you ask it things about the video, it can do that sort of stuff. So that's kind of one of maybe the hidden Gemini trump card in there. So I honestly, I think right now, if you're doing stuff with AI, you want to be using Gemini 3, 100%. In fact, I might just go and buy this subscription. We'll see. Could you market your skill set as a consultant or a contractor? Absolutely, but I cannot seem to figure out how to do that. Where is the place where the people that need work done on Kubernetes and want to do a contractor instead of hiring somebody full time? Where are those people? Where do I find those people? How do I advertise to those people? I think, honestly, honestly, I think I could make more than $200,000 a year if I was doing contract work on SRE sorts of things. Seriously, because it's valuable work, and there are a lot of companies, smaller companies, that need it now. There's a lot of companies that they're moving into a cloud and AI world now. Like, it's just become so obvious that they have to do it. And how are they going to do that? They need the people to get them started and build all of that infrastructure for them and the start, right? So there should be space for it. And if I'm doing it as contract work, where I could be contracting out to multiple people, because honestly, my whole career, I've been like, I will sandbag certain tasks simply because I know that the organization cannot handle my full output. If I go balls to the wall and get things done as quickly as possible, everybody else can't keep up. And then basically I have like 5 things that other people now have to integrate. And it just causes problems. So you have to sandbag it. Right? But if I'm, in that situation, then I just go and start working on the next contractor's thing. And I could be doing multiple contracts at the same time. And at that point, could be hiring other people, because I know of some people that are looking for jobs or that would be totally down for that sort of a thing. So I think I could do really, really well with that, honestly. Make cards and network it with HR drones. I don't know. It's just like there's a network that I got to get into, and I don't know how to do it. Because my big takeaway from the 6-month contract that I did was that there should be a lot of people in this situation, and I am actually a really, really good candidate to do contract work like that. I have, I'm able to plan things and like my work situation and everything else like that I can kind of take on that additional risk of, what happens after that job? What's the next job? And how do you pay for health insurance and things like that, right? Well, my wife, I get it through my wife, right? So that makes me really good really good candidate for contract work. But when I go to these contract work like websites and stuff, it's just like I'm not seeing the way that. Like, one that really interests me is there's a website called Contra, where it's a social network like LinkedIn, but it's basically all built around people doing contract work. And the problem that I've found is that, like, their algorithm really, really prioritizes images, and basically it's really good for like web contracting, essentially, because you can show people what the website looks like. But for what I do, I'm not finding people looking for that there. I thought you found one. I found a 6-month contract to hire job, and at the end of the contract, they offered me 40% below what they were paying me on the contract. And so I told them no. And there was like a 3-month back and forth, and eventually they just said, sorry, we can't do it. I know, right? It really was crazy. Like, they were paying me, like they literally offered me 40% below what they were paying me at the time through the contractor. And there's overhead on that contract too. They were paying somebody else even more than that. And then moving me over to full time was too much. It must have been a really, really massive, finder's fee if they hired me on or something like that, because what the heck. So then I said no, 40%. And what did they do? I thought, okay, well, I'll tell them that's not high enough, and then they'll come back, they'll negotiate with me and say, oh, okay, actually, Seth, you're right. This is what the market is at, so we'll pay you that. right? And instead, what they did is they spent the next 3 months interviewing people to try and replace me. Seriously. And they didn't find it. They didn't find them. So I don't know. I haven't seen anything lately. Maybe they hired somebody now, but it was like so crazy. And then they came back after all of that and they gave me another offer that was still like 20% below. So part of me is like, well, I could have taken that and then just kept looking. But the issue there is like you take a job and then you haven't been there for even 2 years. How are you going to switch over? So that was kind of the thing I was concerned about there. I just, what do they expect you to do? This was like so bizarre. And the whole situation just had me so perplexed that I basically said, I don't really understand what's going on here, but it's probably a bad thing for me to stay here, so I need to keep looking. So that's what I did. That's what I did. It's only been a month, and I had some really good. I have to say, there's the one company that I don't think that they're going to get back to me until next week. I really would like to work for them. That was probably the best interview experience I've had. By far. By far. They're so good. So, it hasn't been that bad. But I sure am feeling, shall we say, anxious this week. Because I don't have any new interviews lined up and I'm not seeing new positions posted. So what am I supposed to do? There are some good offers. That's how I found my working student job as well. Okay, so here's something else that I see in the job market that really, really bothers me. Companies kind of have this pipeline, right? Like, especially you're working for like Google or Goldman Sachs or McKinsey Consulting, like the really top tier, hardest companies to get into. Yet it used to be you'd come out of school and then you'd interview for them and you'd get a role. And so it does not work that way anymore. Now it is you interview for them the year before and you do a summer internship. And then maybe if you do well enough on the summer internship, and when you apply the next year, then they'll hire you on full time. So they kind of have this pipeline where they're kind of grooming and preparing people to enter into the company before they even graduate. Okay. So that in and of itself is not necessarily a problem. But then the issue is that getting in any other way through that, other than that, seems to be extremely difficult, right? Like if you work for an industry, like I worked for Goldman, right? And then you left Goldman and you want to go back to them, or you want to go back to anybody in that industry, because you left that industry, your resume is at the bottom of the stack. Anybody that was their last job was in that industry goes ahead of you, essentially, right? So you can't get in, right? And then on top of that, what are they doing? Companies are treating everybody like they're disposable, right? So that system kind of assumes that there's like, okay, like you get in and then you're in and you stay in. But nobody can actually stay in. Like more than half of people have been laid off in some form or another. So something that's extremely common to basically everybody now almost makes you like a person I don't know what the phrase is, like, especially in this market where there's so many applicants. It's messed up. Again, you can think of it as like a ranking, like of all of the applicants in the tech job market, where do you rank And unless you're in like that top 10% or something like that, you're just not going to find a job. That seems to be the current situation. You know? And again, the only reason I'm saying this is, doesn't that suggest that there is something very, very wrong with the market that should bring in some sort of a government intervention? Can you really afford, like, Donnie, listen to me. You can't afford to let these people be out of work for 3+ years and then think they're going to vote for you. Something's wrong. Something needs to change. And the wild thing is that these people in charge don't seem to have a clue. Right? Like, Trump didn't seem to realize that the cost of living crisis was probably the biggest issue in the United States right now, and is, like, for many people, the sole issue. And it took Mondami winning in New York for him to even think about it. And some of the things that he's saying based off of it sound just incredibly dumb to me, to be honest. Like, let's not say that, like, each individual policy is stupid per se, but just rather that that is the thing that you come out with kind of says to me that you haven't really been thinking this through. Like, you're just found out that this is a problem last week and you're just seeing what you can throw at the wall and get to stick, right? Okay. And that's just the cost of living crisis. What about all of the displaced workers in the tech industry? Literally hollowing out the middle class in front of our eyes, and everybody's just like, oh, the economy is so strong. And Powell's not going to do anything. Man, wow, it's so crazy. It's so crazy to me. And I kind of hate it because I feel like when we talk about it, well, I mean, you guys interact with me and everything, so I guess you want to talk about it, but it does kind of feel depressing, doesn't it? Like, I don't want to get you down or anything. I just can't get over it because I feel like that they're trying to gaslight me literally every day, you know? And I'm not that person. Somebody tries gaslighting me, I'm immediately like, no, and I get uppity. Narcissists hate me because I figure it out almost immediately. We have the same. Well, it's like a global issue, frankly. From everything that I've been told, it's every country. It's like this. So again, if there are displaced workers everywhere and the hiring is slow, isn't that like the biggest flashing red light you could possibly get that says that you're not printing enough money and that you need to inject more liquidity into the system? And meanwhile, the narrative that I keep hearing, and people online say this too. This is the other thing that drives me nuts, is like, if I go to Reddit and you look at people's economic analysis and everything, they're like, oh, it's inflation is a big deal. Jeffrey Gunlock, he says, I'm really concerned about inflation. And meanwhile, I'm over here like, 2 million displaced workers unemployed for more than 6 months. What are they going to do? It's not hard to figure out the root. I mean, if it was so simple, then they would just be cutting interest rates and hiring would be improving, right? I don't know. I mean, I guess one of the issues is that 1 year isn't that long in economic timeframes, you know? Maybe a year from now, it'll be completely different. It could just be hiring was really depressed. because of tariffs and the government shutdown, and interest rates were higher, but we have brought them down a little bit. And with all of those things passed, companies will resume hiring at the level that they should be, and they maybe are even a little bit behind, so they might hire a little bit more aggressively, and it'll all be fine. And it just might be we have to wait until after Christmas and layoffs for that to happen. You would think, but are the people who could incentive? No, they're not. Well, I think one issue in the tech industry is definitely that all of the big tech companies did massive layoffs. And so that's where I think a really big bulk of these displaced workers are coming from. And then instead of slowly hiring people back and everything normalizing out, they took all of that money and they're investing it into AI, right? So that's another issue. Is could it be the case that my industry is screwed until the AI bubble pops? Ugh, I hope not, because it might be a really long time before that thing comes crashing down. Who knows? Could be that it lasts long enough that the problems we're seeing with it don't matter, you know? Like, there is a certain point where the AI becomes efficient enough and the things that it does is amazing enough that you're making so much money from that, it pays for itself, and all of that investment isn't actually as big of a deal as we think. Could happen. Plumbers are going to make bank on AI. Someone's got to run those pipes. Well, AI did already change software development, that's for sure. But I don't know, man. Like, when I say it changed software development, yes, everybody uses LLMs now. Instead of what? StackOverflow.com. So, like, did it fundamentally change the productivity of tech workers? I don't see evidence for that yet. Okay, well, anyways, I think today I should work more on these videos so that maybe tomorrow I can try and record one of them and get a video, you know, one of these out. What would I like to do it within the next week? Maybe before Thanksgiving. Let's see here. Because Thanksgiving is next Thursday, right? So maybe I want to wait until December 1st anyways. But I want to get one of those videos out because the order flow is becoming a big thing. I want to capitalize on it because we are well positioned to. Honestly, nobody has as good order flow content as we do. Not even close. Not even close. They just probably lots of people that have more videos and lots of information and everything, but like it's all junk information, right? So I want to make a video about that. All right, guys. I will see you tomorrow. Oh, remember, there is the FOMC meeting minutes. Those could be explosive. We'll see. But tomorrow also employment numbers. So see you guys. Stay